We're going to be talking about gold now. Mentioned it earlier. It just hit a high yesterday, trading off just a little bit. But for more on where gold goes from here, we now go to Suki Cooper. She's a precious metals analyst at Barclays Capital. She's also a Bloomberg best forecaster of gold prices. She likes gold in the short term, but predicts we will see a turning point in the months to come. Well, Suki joins us now from her firm in New York. So good to have you, Suki. Thanks for joining us on this Friday. Let's talk a little bit about where gold is trading today. We're off the high that was hit yesterday. But what's your forecast?
We still expect gold prices to gain upward momentum, so break the barriers that it's facing at the moment and hit new highs this year. But we do think prices will peak towards the end of this year and then start to ease. What we saw at the start of the year was a lot of positive macro data was being priced in, and that weighed upon prices. We saw heavy profit taking, but then the very strong Asian physical demand buying actually limited the downside. But since then, we've seen a number of issues propelling gold prices to fresh all-time highs, and we think prices are going to average $14.95 this year. So we're still expecting fresh highs to be hit later on this year.
Wow, so you expect an average of $14.95 for the year. Talk to me about clearly gold is the flight to safety trade, and we've certainly been seeing that with events in the Middle East, North Africa, and of course in Japan. But let's talk about physical demand and then pure speculation. How do you when you're looking at the figures and trading activity, how do you know which of those three, strong physical demand, flight to safety, and speculation, is driving the market?
What we tend to look at is premiums, particularly physical premiums across various regions, to give us a good idea of what the physical underlying demand in the market is, and also the trade data as well. And the remarkable strength that we saw at the start of this year really came from Asia. But the interesting thing was that it wasn't centered in just one country. We saw bar premiums hitting multi-year highs in China, in India, in Tokyo, in Singapore, and in Hong Kong. So there was a lot of underlying strength in the physical market that limited the downside in gold prices. But to get an idea of where we are in terms of investment demand, we can track the ETF flows, which give us a good idea of what longer term investors are thinking, and the speculative interest in terms of what the weekly COMEX non-commercial positions or where they are trading at the moment. So
what are, Suki, what are the ETF flows indicating at the moment, and do you expect to see a turning point?
This year, they kicked off on a very weak note. We saw the largest monthly outflow in January of 64 tons. That weakness continued into February. We saw another significant outflow. But what we've seen is a turning point in March. Flows have actually stabilized and turned positive. So even though we've seen net redemptions materializing across the ETFs, the overall holdings are still very strong. And I think that's a sign that the underlying market uncertainties are still encouraging investors to retain that long position in gold right now.
Let me ask you, in terms of macroeconomic factors that may be affecting trading in that flight to safety trade, should we see things calm in the Middle East? Or let me ask you, what would be a sign from the Middle East and North Africa that things are calming down that might impact the trading on gold?
What we've seen in gold is not necessarily a direct correlation with the heightening of geopolitical tensions or the events in Japan, but investors tend to allocate to gold on a slower basis when we've had the ongoing market uncertainty. So in the recent sessions where we've seen the European sovereign debt issues resurfacing, we've continued to see investor interest, or the longer-term investor interest, turning favourable towards gold. So I think right now the ETF flows are absolutely essential to watch. If the longer-term investors are more comfortable with the macro outlook, then we'll see redemptions, and that will be a clear sign that the gold rally has run its course. But at the moment, there are so many uncertainties, and on top of that, interest rates are still very low, making it a very attractive opportunity and a very attractive moment to hold gold.
So which, if you had to narrow down the most significant events as it relates to your forecast for gold, what are they?
I'd say the physical flows are absolutely key, because that's what's going to limit the downside for gold prices. So if the physical demand that we've seen in Asia starts to slow, then that's a sign that the floor that gold prices have found in recent sessions is a lot lower than where we've seen it at the start of the year. I'd say the ETF flows are absolutely essential as well, because it's been a longer term desire to hold gold as a portfolio diversifier, given its low correlation with other assets, and as a hedge against inflation, long-term inflation concerns. That's really made the story in gold a long-term rally rather than just a spike. So if those issues start to wane, then we would expect gold prices start to ease as well.
And then, Suki, you do cover other metals, silver, palladium, platinum. Do any of those other metals have that sort of flight to safety quality?
We've seen sometimes the PGMs benefiting a little bit, but across the complex, aside from gold, it would be silver that piggybacks on gold's safe haven buying properties. And we've seen silver really outperforming gold when the retail interest has picked up. And it's really been a case of where the retailing communities feel like they've missed the boat in gold, or gold is trading out of their price range, that we've seen silver benefit. So that's something that's really come to light over the last 8 to 10 months, where we've seen the investment demand in silver being propelled to incredibly high levels.
Let me ask you this. Today, both gold and silver are trading off a little bit. Do you think that's a trend that will continue, at least in the short term, is suggesting maybe that the rally was overdone very recently?
At the moment, say, gold prices are struggling to break new highs, but I think it's still very impressive that even when we saw prices dipping towards 1400 and the high 1300s, that the physical demand in Asia materialized. We've actually seen safe haven buying coming across in Japan as well, in Western Japan, where bar premiums there have hit in 3-year highs. So at the moment, the physical demand, even though it's not in a seasonally strong period, has provided some support. But I would say that we could see prices softening a little bit before they regain their upward momentum.
But your average for the year, again, just to clarify the forecast, is 1490.
1495, that's right.
1495. Now trading about, I think, 1426 when I last looked. Suki, thanks so much for joining us.